So can you all check, can you all switch on your cameras? Then I can check whether you are fit for the quiz as well. Yes, students, can you all switch on your cameras? Guys, are you ready to switch on the cameras at given time? Are you ready for that one? No one is responding for me. Yes, students. Good. 1, 2, 3 students switch on their cameras. Good. Good. Okay. Right. Okay. Good. Good. Right. All right. So you can switch off your cameras. Thank you very much. Right. So I will look into that one. So when you are doing the quiz, how about your respondent for the switch on your cameras, right? That is compulsory. Otherwise, we can have a test. No, that's why I just asked. Right. So we'll start the new lesson for the evening start. That is capital structure, right? So we'll discuss capital structure. So there are two parts in this lesson actually, the part one and capital structure. Part one is regarding the leverage and the other one is regarding the capital structure theories, right? Leverage and then the capital structure theory. So then evening session, we'll discuss leverage concept, how the leverage is impacting for the shareholders, equity and all the things. And then the next week, we'll discuss the theoretical aspect of that means the theories developed for the capital structure lesson, capital structure decision. There are a lot of the relevant theories, so irrelevant theories and all. So then next week we'll discuss that part. This week we'll discuss the leverage and complete that lesson. Okay, so then let me share the screen. You all can take down the heading capital structure theory, right? You all can take down the heading capital structure decision, right? Capital structure decision. Thank you. Here. Excuse me. Okay, so hope you can see my screen. Right? So finance, we identified 4 decisions. The first decision is the capital structure decision. Now we are discussing that one. The second decision is working capital management decision, already completed in the morning session. Third decision, investment decision. Last week we completed that one. Yet to be completed, that is the dividend decision, right? So if the time permits, we'll discuss the dividend decision in the full scenario, or otherwise I will already upload the handout dividend decision to the LMS. Based on the time constraints, we'll decide whether to do that one or else have the tutorial on that one, right? So then Now we'll discuss the capital structure, right? Capital structure or capital structure decision. As I told you previously, capital structure decision having two aspects. The first one is leverage, and then the other aspect is capital structure theories. You can see the capital structure theory. Capital structure theory and then the leverage. So then we'll discuss this one today for the evening, leverage. So therefore, another topic, capital structure decision. Second topic, take it down, leverage, right? Leverage. So this is a typical balance sheet that I have included it here, right? So when I'm starting the working capital lesson also, I show this one, the balance sheet, and then came to the lesson. Here also the same, right? Don't need to again go through it, go through these items. We know assets linked with the investment decision, ID, that is investment decision. And then current assets, we know it, that is working capital management decision. And then non-current liabilities. And if it is a current liabilities, even though it is not mentioned here, current liabilities, WCM, we know remaining is equity and non-current liabilities. It is handled by which decision? Relevant for which decision? Capital structure decision. Capital structure decision that we are going to discuss today, right? So then you have to remember, as well as now you are mostly familiar with the accounting background, not the finance background. So therefore, just to going through the finance background from the accounting background, now to just identify, just recall your memory regarding what are the items included in the equity as well as liabilities, right? So if we are going through the equity, what are the components included in the equity? Yes, what are the components included in the equity? Share capital, with share capital, ordinary shares, and then what else? Reserves, retained earnings, revaluation reserves, and all the things are belongs to the equity, right? E, we call them as a equity with the letter E. And then there are some non-current liabilities as well, long-term liabilities, long-term loans, and then medium-term loan might be, and then debentures, bonds, long-term part of the lease, long-term part of the, what do you call, the employee benefits and all. So then these are belongs to which category? Debt instruments, right? So there are some, all these components are showing us how the companies are acquiring the funds for the long-term fund requirements, not for the short-term fund requirements. We know if it is regarding short-term fund requirements, that is coming under the working capital management decision, where the company's finance manager need to balance the current assets versus current liabilities. But this is the something long-term requirement where you are not fulfilling, or else where you are not, as a financial manager, not able to collect the funds via some small sources or some short-term sources. In that sense, companies have to value, or else companies have to go through the long-term financial requirements, which is called as debt or equity. We know capital structure, right? Capital structure. What do you mean by then the capital structure of the company? Okay. You can read this one. The left-hand side of the balance sheet, liabilities plus equity represent what? Represent the financial structure of the company. So that is what I previously discussed. What are the equity instruments? What are the equity components? And then what are the debt components, right? We discussed. The various means of the financing represent the financial structure of the enterprises. We discuss, right? Then what do you mean by the capital structure of the business? The way how the company fulfill its long-term financial requirements. If either equity, it might be sometime debt. There are some companies who are fully equity-owned company, right? So when the companies say within the industry, we have a specific name for that. What is that name? The unlevered companies, right? Unlevered. You have to spell that word. You have to remember that word. What is it? Unlevered, right? Unlevered company. So we know capital structure in the sense capital structure. Capital structure, right? Either equity or debt, right? Debt. What are the components coming under the equity? Ordinary shares, reserves, retained earnings. So these are the sum of items coming under the equity. So then what are the items coming under the debt? Debt, debentures, and then loans, bonds, preference shares, and all. Right. So then capital structure shows what? The way how the company fulfill its long-term requirement, whether coming from either equity or the debt. There are some companies whose capital structure is only equity, no debt, right? So then we call this kind of companies as unlevered, unlevered companies. Unlevered companies. But once the company is mixing the equity with debt, right? Equity plus debt, we call this kind of a companies as levered, right? Levered, levered company, right? Unlevered versus levered. So this is fully equity, but this is equity plus debt. Sometimes that might be like this also. Equity this part, debt this part. Sometimes it might be like this. Debt this much, equity this much. Might be. Right? Anyway, anyhow, if the companies are mixing the debt instrument with along with the equity, definitely that kind of company is then becoming a from the unlevered to levered, right? Unlevered to levered companies. Just tell me the question. Answer me. Are we going to take the short-term borrowings for the equity? Oh, capital structure, short-term obligations, short-term loans. Are we considering short-term loans for the capital structure of the company? What's your answer? Short-term. No. What's the reason? What is the reason? Short-term loans are handled by which decision then? 1 year, less than 1 year loans. So those are handled by which decision? Yes. Which decision might be relevant to the working capital management decision? We are not considering short-term borrowing, short-term loans, which is less than 1 year period loan for the capital structure of the business. Normally, capital structure includes the components which are very stable components, not time to time changing financial instruments there. Okay, now this is the finance manager. Might be Sumudu, might be Charit, or might be Chalita. So CFOs, now as a capital structure decision, what you are deciding, once the long-term financial requirement comes, either we are going with equity or debt instrument to fulfill that requirement, right? Again, as a finance manager, what we are going to discuss is if the company is having long-term financial requirements, they have to select either debt or equity. Sometimes it might be entirely equity, sometimes that decision might be entirely the debt, sometimes mixing both, right? So therefore, as a finance manager, you have to decide which option is best. That is up to you. Which is the best combination? Which is the best combination along with the expenses that we have to incur? We'll discuss under the lesson today, right? Capital structure decision. Okay, so this is an image, right? This is an image where this explain the essentiality or as the process of capital structure decision. You take a 1 minute, 2 minute, and then study it and just try to understand this one by your own words. So then I can explain with your thoughts as well. So therefore, just look at this one and then try to understand, and then you have to explain me within 1 minute, right? Just a 1 minute. What is about this picture? Just go through the image and just I study it. This is the process of capital structure decision, starting from A, that is capital budgeting decision, and then ending with the firm value. Just try to map this one, try to understand this one by your own side. There are some steps 1, 2, 3, 4, 5, and likewise. At least try to map the steps as well. Entire the capital structure decision lesson we'll discuss by this image. Just study Starting from the capital budgeting decision and then ending with the firm value. Okay, students, what is this? Sumudu, can you explain this one? We'll give the chance for Patu. Patu, can you explain this one? Patu, absent. We'll check whether he's there or not. No, 16 individuals are here. Morning we had only 15, no? Pereira, yes, Patum Pereira. I can't hear your voice. NKP Pereira. So actually, why the companies need to raise a lot or else raise huge funds? Why it is? Students, tell me why the companies need funds. We identify there are two financial requirements, right? First one is short-term requirements. There might be some short-term requirements where again dealing with the WCM, working capital management. But if companies wants to have major decisions, what are the major decisions? Look at the slides there. Replacement, right? So you want to replace. What is mean by the replacement? So we have a new building. What we can, sorry, we have a new computer. We have just computer, old computer. We are replacing it with a new computer, right? So if it is a company's replacement decision, it involves huge fund requirements, right? Other one, modernization, right? So in my computer, it just the black color, right? So then I want to modify it. So what I can do is I can modify it with the yellow color. I want to mark it, make it as a customized one. So then pink, right? So then and meanwhile, I have changed my dashboard as well, or else the computer, dashboard or monitor and all. So then I just modify it, right? I modified my black color computer into a pink color one. Modifications. If it is a modification, we need funds, right? Not just 1 million, 2 million. It might be 20 million, 30 million, 50 million, 1 billion, and likewise. The other one, expansion, right? So we had SAP campus at the Gold Road now. So then we are targeting to open a SAP campus again at branch at the Corella, right? So what happened? We have expand our business. Then diversification. Diversification means we just have education facilities, other education facilities for the accounting and then business analytics. Now we are targeting for the financial engineering program also. In future, you might have that one. So then financial engineering, what happened? We have shifted girls, we have diversified our investment into the three departments: accounting, business analytics, and then financial engineering. Diversified our business. So then to have a diversified impact or to have a diversified business, or else for the diversification, can we just spend on 1 million? No, you have to just spend a huge money on that one. So therefore, the fund requirements, long-term fund requirements, huge fund requirements are creating based on the capital budgeting decision, right? To initiate the capital budgeting decisions, we need funds, right? Long-term requirements. So then, in that sense, companies, finance manager need to involve deciding capital structure decision. So then, in that point, capital structure decision need to be addressed by the company's finance manager. In when he is deciding whether to go with the debt to equity, definitely there are two components to be considered. The first one is existing capital structure, right? At present, we have 50-50, right? Debt 50, equity 50. But sometimes your companies might have 75-25. 75 debt, 25 equity, existing capital structure. You have to concern on that one. Either we are going with them, what happened to the existing one, right? If we have only 25% equity, in this time also, if we raise our debt, fund requirement by equity, then it would be coming a 85-15. 85 debt, 15 equity, right? 85 debt and then 15 equity. So then what happened? Terrible. right? So therefore, you have to consider existing capital structure, not that one. You have to decide the dividend payout policy. Dividend payout policy. By considering these two, you have to decide, right? You have to identify desired debt equity mix, right? So based by considering these two factors, one and two, right? You have come up with the three option. Option number one, option number two, and option number three. Option number one, debt equity this side, and then option number one, 50-50 debt and equity. Option number two, 100% equity, no equity, 100% debt, no equity. Option number three, 100% equity, zero debt. So likewise, you have to identify the desired capital structure, right? And then after deciding the desired capital structure, check whether the return and risk of these options, right? Return and risk of this option. How can we test that one? By identifying the effect on the cost of capital, right? That is what we have calculated as the weighted average cost of capital in last week. So if we are going with the option number one, what happened to the WACC, right? What happened to the WACC? Is that increase or is that decrease? Right? This is option number one. If you are going with the option number two, right? So what happened to the weighted average cost of capital? It is increase or decrease. So then if we are going with option number three, third option. So then what happened to the weighted average cost of capital? Is that increase or is that decrease? So you have to concern, right? It is directly impacting, deciding the capital structure, deciding the cost of capital, decide what value of the firm, right? Value of the firm. So then sometime if the weighted average cost of capital is going up, value is going no. Sometime weighted average cost of capital is going down. The firm value is going up. This might be the case. So then this is directly linked with, right? Directly linked with the firm value, right? So then you have to identify which is the best option, right? Which option is the best one where it minimizes the weighted average cost of capital by maximizing the firm value. That is the point you have to identify as the final desired capital structure, right? Optimal capital structure, optimal capital structure. So this is the entire process from A to Z capital structure decision. If you want, you can note it down. Right. Hope you done. Now come to a main point, that is the leverage, right? What do you mean by leverage? Yes, leverage in the sense once you mix the debt with the equity, it's starting to become a levered company. So then leverage in the sense, if the company is, it's a broader concept, we have to accept and then refers to what? Used fixed cost, right? Fixed cost to magnify, to optimize returns. Returns of whom? Returns of the shareholders. Returns of the shareholders, right? So therefore, what are we have to identify two things. That is the first one, fixed income. What do you mean by fixed costs or the fixed income securities? And the other one is returns, right? Fixed income or fixed cost. What are the fixed costs? What are the fixed costs related to the capital structure of a business? Think it like this: company obtaining a loan, right? Company obtaining a loan, or is debt instrument. Once the debt is mixing with equity, it's starting to become a levered company, or else the company is starting the leverage, right? Company is now becoming a leverage company, levered company. So if the company is mixing the debt instruments, for example, if company purchase loan from a bank, right? Again, what happened? They are levered company. They have to pay interest. They have to pay the interest. If company is starting to collect the funds via the debentures or the bonds, they have to pay the interest or the coupon payments relevant to the bonds or debentures. If company is obtaining preference share, funds via the preference shares, they have a fixed cost, that is the dividend. Those are fixed cost, right? So if the company is having the loans and then if they are taking the fixed cost, sometimes it is impacting for shareholders' return. Shareholders' return might be the calculation of earning per share, EPS, or ROE. So then leverage means companies are mixing the debt with the equity. Having that, so company have to pay for the fixed cost. That fixed cost sometime captures or sometime optimize returns of the shareholders, where this is called as the leverage, right? Leverage. There are three types of leverage. First one is financial leverage. Second one is operating leverage, OL. Third one, combined leverage, right? Operating, financial, and then the combined leverage. This different type of leverage identify different type of impact of mixing these fixed income securities for the shareholders' return. Sometimes it is impacting for the EPS, right? Shareholders return. We are calling that one as a financial. Sometimes mixing these their fixed costs sometimes create the huge impact on the EBIT, where it is captured by the operating. Sometimes the both collectively operating and financial leverage impact, right? Collectively, the financial leverage and then operating leverage identified from how the company's sales changes, it is impacting for the EPS and ROE because of this fixed cost played by the financial instrument. We are calling that one as a combined leverage. Accordingly, we have to identify there are three types of leverage: operating, financial, and combined leverage. Hereinafter, we are going to identify these three types of leverage. Very simply, leverage means mixing the debt with the equity instrument. So financial leverage. We'll study first financial leverage, students. So as we discussed so far, if company mixing debt instrument with the equity instrument, we know it is now going to become a levered company. It is now going to become a levered company. Right? From unlevered, if it is not having a equity previously debt, now it is becoming a levered company. If it is becoming a levered company, again same scenario, they have to pay fixed securities charges. We call them as fixed income security charges. Sometimes that is a fixed cost also. ස්ථාවර වියදමක් ගෙවන්න වෙනවා. So what is this fixed income or the fixed security that fixed cost that we have to pay? That is the interest. That is a coupon payment. That is a debenture interest. That is sometimes the fixed dividend as well. So because of this fixed dividends, because of this fixed corporate, the coupon payment, fixed interest, what happened is that is creating an impact on shareholders' equity, right? Shareholders' equity, right? That means return of the shareholders. Mixing the debt where it is having a fixed cost for that debt, creating an impact on shareholders' equity, shareholders' return. This is called as the financial leverage. ව්‍යාපාර ආයතනයක් ණය equity එකත් එක්ක mix කරපුවාම ඒ ගෙවන fixed charges වල එහෙම නැත්නම් ඒ ගෙවන interest coupon payments ඒවා දාන financial statements වල P&L එකට P&L එක තුල තියෙන මේ interest coupon payments debenture payments and then the dividend payments are creating some sort of an impact on the shareholders return. එහෙම ඒ fixed charges ගෙවන නිසා යම්කිසි ප්‍රමාණයක ලාභයක් හෝ අලාභයක් යම්කිසි ප්‍රමාණයක වාසියක් තියෙනවා කාටද සාමාන්‍ය කොටස් හිමියන්ට. So this is called as what? Financial leverage. This is actually captured by the financial leverage. First type of the leverage. Right. So you see here fixed charge sources, that means debt, preference shares and all. If this is so, you have to pay the preference share dividends and then the interest and then sometime coupon payment and all. Because of this interest, sometimes shareholders' equity is going up, right? That is what we call as the financial leverage. We'll read it. Financial leverage in the sense the use of fixed obligations like debt or preference shares. By taking those things, you have to pay the fixed charges to increase what? To the potential return of the shareholders, right? The changes in shareholders' return because of this obtaining financial instruments, financial obligations and all the things where it is coming under the financial leverage. To identify the financial leverage, you can have the debt ratio. That is very simple. Debt divided by V. We know value in the sense the value of the debt plus value of the equity. The other ratio is debt to equity ratio. Debt divided by equity. Important one is interest coverage ratio. Interest coverage ratio means from the EBITDA, right? From the EBITDA. EBITDA in the sense earnings E. B in the sense, what is mean by B? Students, what is mean by B? B for ball. No. B for what? Before what?
Borrowing.
Okay. Different. What else? Be in the sense earnings
Before interest and taxes.
before, be in the sense B, earnings before interest, I in
Interest.
the sense interest, I in the sense interest, T means tax,
Taxes.
tax, D in the sense depreciation, depreciation, D depreciation, and then E in the sense amortization, right? Earnings before interest, tax, depreciation, and amortization. Right. Divided by interest. What is this? This is this measures actually how far company or else how many times company can settle its interest by using EBIT, right? If this is the ratio is high, that is a favorable condition for the business. But if this is one in the sense, you just have the EBITDA, which is equal to your interest installment for a 1 month or 1 year, which is not good for the company, not favorable for the company. So students, so then interest coverage. Interest coverage identify the capacity of the business to settle its interest by using the EBITDA, right? It is also having a some sort of sense regarding the financial leverage. Debt ratio, we know it, equity ratio, and then third one, interest coverage ratio. Okay, so we'll take down headings, right? Hope you have written down some things regarding leverage and then take down the heading effect of the financial leverage on the shareholders' equity, right? Take down the heading effect of the financial leverage on shareholders' equity. Quickly write it down. Effect of the financial leverage on shareholders' equity. Okay. Students, the way of measuring the shareholders, impact of shareholders' equity, definitely what you need to calculate is these two measures. First one is EPS, the other one is ROE, right? So sometime you might learn the way of calculating ROE and EPS before. Anyway, we just identify how can the companies can calculate the EPS, profit after tax, PAT, profit after tax divided by N in the sense number of shares. Which shares? Can you tell me which shares? Number of ordinary shares, right? Number of ordinary shares. EPS in the sense the capacity of earning of a share, earning per share. Other one is ROE, return on the equity, right? Or a return on the equity. Again, the difference is again profit after tax divided by which one? Value of the equity. Not the number, that is value of the equity. So then the finance managers can identify how much of return that the company can give to the on equity, right? On equity. So the additional point here, when you are calculating ROE, you can use either book value or the market value. That means when here we have to identify the value of equity. Value in the sense V equals number of shares multiplied by the rupee value. That rupee value might be either MPS market price or the book value. So this is what it says as additional point. Right. Okay, we can go to the tutorial question number 1. You all can go to the tutorial question number 1. Quickly weave it. Okay. Give me 1 second. I will upload the tutorial. It's not there. Sorry. Okay, students, now it is there. Quickly check it whether it is available on our tutorials. Given here the formula for the exam also mentioned. Formula sheet for the exam and then dividend policy it's there and then here tutorials. Okay. Question number 1. Question number 1. Try to do this one, question number 1. Read the question and there are 2 options. They are asking how it is impacting for the shareholders' earnings. Remember this, if any question asking share impact of shareholders' equity, what you need to calculate is ROE and EPS. At the examination, you might not given this word, right? This is blank. This one is not given, right? What you have been asked, calculate the effect of alternative plan from the shareholders' equity. You should identify if it is earnings, what you need to calculate. EPS and ROE. That is up to you to decide. How can I identify the shareholders' equity? Just remember this, shareholders' equity in the sense EPS or ROE. Right. Okay, you can just try on the question. We'll read the question for one. Suppose a new firm Marsha is being formed. This is a newly in the open business. The management of the firm expected the before tax rate of 20%, 24% on the estimated total investment of 500,000. Tax එකට කලින් 124ක් බලාපොරොත්තු වෙනවා මේ investment එක. Investment එක කීයද? 500,000. Investment එකෙන් 104ක් හම්බ වෙනවලු tax වලට කලින්. Now to identity, or else now we have opportunity, we have opportunity. What is the opportunity? You have 500,000 as a company. If you can give a 500,000 as a company, we also can give a 20%, 24%. That is the option is. Now the company finance manager is considering, okay, I have an opportunity to fulfill this opportunity. How can I raise the funds? He has two alternative plans. What those two alternative plans are? First one is deciding, okay, this can be acquired, this 500,000 can be raised via 50,000 ordinary shares at a rate of 10%. 50,000 shares 110 ගානේ issue කරලත් මේක ගන්න පුළුවන් නේ. එහෙම මිනිස්සෙන් එහෙම shareholders ලාගෙන් සල්ලි අරගෙන දානවා investment. ඒ දාන investment එක කීයක් දෙනවද? 124ක් දෙනවා. You have to understand the process, right? Then the other one, I need how much? I need 500,000. So then that 500,000 can be obtained via 25,000 shares multiplied by 10%. That means 250,000 equity. Other 250,000, we are obtaining a borrowing, or we are borrowing it at a 15% rate of interest. Then onna මොකද උනේ? First option full unlevered. Second option now including the debt in the sense it is now levered, right? Unlevered option number one becoming a levered option in the second one. So if what is asking which plan is good, right? Either fully equity plan or either other one, debt plus equity plan is good for the shareholder. So then you have to calculate ROE and then EPS under these two different plans. Quickly do it. Try to do it. I will ask one by one. You can draw a table and then 3-column table. First one description, second one option number one, third one option number two. Okay. Hope you all can see my screen then. Description. Option number 1. Option number 2. Description. Option number 1. Option number 2. The option number 1. Can anyone tell me what do you mean? What is the option number 1? It is all equity. It is all equity. Right? And then option number 2, that is debt plus equity. Now, what is the first one? If we invest in this particular investment, our return, right? Return on that particular investment, return on investment. Return on investment. Return on investment is how much? 24%. Either we funded via all equity, we will get a 20% return on our investment. How much is the investment? Investment is 500 multiplied by 24%. What is the return there? Can anyone tell me the return? Can anyone tell me the return? Yes. Can anyone tell me the return? Students, can you tell me the return for this one? No one is going to answer. Are you all for ready for the quiz? No. Hope not muted as well.
120.
120,000. Thank you very much. 120,000. Just tell me, even we are funded by all equity, we will get 120. Or else, even we come up with the debt or equity, are we going to have the same value? Are we going to have the same value if we are funding via the debt and equity? What is your idea? What's your idea regarding that? If we funded via all equity, we will get 120,000. Is it changing if we change the mode of acquisition of funds? Is the ROI is changing if we change the mode of acquisition of funds? Yes? Yes or no?
No. No.
No, right? No. Even we have funded via debt or equity, that doesn't matter for the investment company. Even we take the equity, that doesn't matter for the company, invested company. Whatever the fund we have provided for the investment company, they will give us how much? 24% on our investment. So therefore, even we are going with option 1 or option number 2, return doesn't change. Right. So then, do we have expenses for the option number 1? Expenses? Expenses? No. But do we have expenses for the option number 2? Yes, it is. What is that? That is the interest. That is the interest. We don't have any interest if we are going with the equity. But if we are going with 250,000 loan, you have to settle the interest amount. How much is the interest? Can anyone tell me interest amount? Interest. You tell me, I will draw it in what? Interest. How can we calculate the interest?
37,500.
Very good. 37,000. 37,000. 37,500. How did we calculate that? Loan is 250,000 multiplied by 15%. That is the answer for 37,500. Right. Now, calculate profit before tax. PBT. PBT. Profit before tax. It is 120,000 for the all equity. But students, here, look at here. If we are come up with the option 2, you have to settle the interest and then your profit is decrease up to 82,500. 82,500. Now calculate the tax. Tax. %50 tax. That means 60,000 tax here, but tax burden reduced to 41,250 in the option number 2, which is a favorable for the company, right? Previously, we paid 60 now, but we are paying 41,250. Yes, now you can calculate profit after tax. Profit after tax. PAT, profit after tax. It is 60. 41,250. And then calculate ROE. Calculate EPS. For option number 1 and option number 2 and decide which one is best. Which one is best. ROE, how can we calculate ROE? We know profit after tax divided by value of the firm. Value, how much is value of the firm under the option number 1? 5. Yes, value of the equity actually. Sorry, value of the equity, that is 500,000. Here, profit after tax 60,000 divided by number of shares. How many shares? 50,000 shares. But option number 2, profit is 41,250, 41,250. But now equity has been reduced up to 250,000 here. 25,000 multiplied by 10, and then EPS number of shares, that is 25,000. Right? Calculate ROES and EPS for the particular scenarios and write down your conclusion on this. Okay. What is the value of ROE? ROE, how much? Yes, ROE. How much is the ROE?
0.12.
12. EPS? EPS should be 12, no? ROE is how much? 0.12. Am I correct?
Correct.
Ah. That means 12%. ROE for the second case?
16.5%.
0.165 or else 16.5%. EPS 1.65 per share, right? This is per share. Right, okay. What is your conclusion then? Which option is good? 1 or 2? Second one, right? Second one. Why? Look at here. First case, EPS is only 1.2. But if the company is going with the loans as well, and then via the loans, if the company is trying to fulfill this investment, they can earn 1.65, which is higher than the first option, option number 1. That means obtaining. So this example concludes what? Obtaining loans, right? Financial debt. Debt in the sense increasing financial leverage, FL, is good only for the condition, right? This is good, right? Or else this increase shareholders return. Only where ROI is higher than the interest rate. Right. In our example, ROI that is 24. Interest rate 15. This therefore, right, obtaining financial or is obtaining debt or increasing FL is good. But the thing is, right, this is the first one. But the thing is, if, right, if ROI is less than the interest rate, don't take the debt or don't increase financial leverage. Because it is creating negative negative impact. Negative impact for shareholders equity. Shareholders equity. If you can do the subsection 3, right? Or else question number 2, you can realize that one, right? What happened? In that case, ROI is less than the interest rate. Definitely, your ROE as well as EPS getting declined if you are moving towards the debt option, debt plus equity option. Please write this one. Okay. Please write this one. So we'll go to the next question. Before the break, we'll complete that one and have break. Right. So calculate the gain from the financial leverage, right? Since we have obtained the loans by paying the interest from that obtained amount of loan, what would be the gain that we can have? Okay. So just okay. You can take down the heading gain from gain. Gain from financial leverage. Gain from financial leverage. Right. So ROI, return on this particular financial leverage in the sense what is it? Debt, right? So we have obtained debt. How much is in? That is 250,000. If we put this 250,000, the return on that 250,000, which is 12%, equal to how much? Can anyone tell me 250,000 return? That is 60,000. We obtain 250,000, then we put in the investment, right? Investment through itself for this 250,000 give us 12%. Sorry, not 12%. That should be 24%. 24%. 20% return. We are trying to find the gain. No? That is right. So then we have expense, that is the interest. That is the interest. So then how much is the interest? Interest is 37,500 deducted. The amount 22,500. This is profit before tax from the loan. From the loan part. LOAN part, the loan part. So then you have to pay the tax on this amount. No? So then tax. Tax is 50%. 11,250. So then 11,250 is what? That is the gain from financial leverage. Gain from financial leverage. මේ කියන්නේ ගත්ත ණය ප්‍රමාණයෙන් අපිට හම්බ වෙන ලාභය ගණන් කරන්න කියලා තමයි කියන්නේ. එතකොට අපි ණය ලක්ෂ දෙකමාරකුයි සහ 2.5 අරගෙන ඉන්වෙස්ට්මන්ට් එක කරලා තියෙනවා 500,000 වලට. ඒකෙන් ආට කියනවා ඔයා මේ ණය වල විතරක් ණයෙන් අරගෙන දාපකේ ලාභයක් තියනවාද කියලා බලන්න කියලා තමයි මේ අදහස් කරන්නේ පුතා. එතකොට 250,000 තමයි the amount that we have allocated for the investment. Return is 24%. If you are obtaining the loans, you have to pay the interest. අපිට ඒකට පොලියක් ගෙවන්න. ඒ පොලියත් ඒ ලක්ෂ දෙකමාරෙන් හම්බ වෙන 60,000 ගෙවපුවාම 22,000ක් ඉතුරු වෙනවා. හැබැයි ඒක විතරක් නෙමෙයි ඉතුරු වෙන්නේ. අපිට තව ටැක්ස් එකකුත් ගෙවන්න ඕනේ. එතකොට ඒ ටැක්ස් එකත් අඩු කරපුවාම the final amount that you can have is 11,250 as the gain from the financial leverage. Right. Okay. So now so what is this says? Favorable, unfavorable, and then ROI is equal, neutral condition. That is what we have discussed. Yeah, we'll go to the degree of financial leverage after the break. So then you can quickly have a 10 minutes break and come. So then before the quiz, we can complete the degree of financial leverage and then have the quiz. Okay. We'll start this next part. Hope you all are back now. The next thing that we need to discuss is degree of financial leverage, right? Degree of financial leverage. So what do you mean by degree of financial leverage? So when you are changing, right? When you are changing EBIT, right? Earnings before interest and tax, right? How it is reacting for, or else how it is impacting for EPS, to change the EPS, which is measured the shareholders' equity, right? So this is because of, why this is because of the financial leverage, right? So sometime because of the financial leverage, you have to change the EBIT. Why it is? Sometimes the interest is changing, right? The fixed charge that you are paying on behalf of the rate step component, right, is changing. So then if it is changed, definitely it is impacting forward. EBIT, interest venas not EBIT venas. So then if in that kind of a circumstances, how can you identify the impact of the changes to EBI, the impact of the changes in EBIT to what? To the changes in EPS, right? Which is covered by degree of financial leverage, right? We technically call it as DFL again, right? So we obtain debt in the sense that is increasing the financial leverage. If you obtain the debt, if you obtain the loans, borrowings and all, as a company, you have to pay something, a fixed charge, which is called as interest or fixed charge, fixed payment. Because of the changes in this fixed payment, because of the changes for the financial leverage, definitely the EBIT is changing. Once the EBIT changes, it is directly impacting for the EPS, which is measured by the shareholders' equity impact. So then, once you change the EBIT because of the interest and all the other changes, how it is impacting for the EPS, where the shareholders' equity will captured by degree of financial leverage, right? How can we calculate it? There are two methods for the calculation of degree of financial leverage. Delta change or else delta or percentage change in the EPS to the changes in EBIT. This is the first method. Method number one. Method number two is, right? Method number two. Method number two is second method. Second method, write it down. Degree of financial leverage equals contribution. Contribution. Right? I'm sorry. This is the method number one. Write down the method number two, that is DFL equals contribution. You know contribution. How can we calculate the contribution? selling price minus variable cost divided by contribution minus fixed cost minus interest. Right? So this is how can we measure the degree of financial leverage. Again, if you want to rewrite it, again, same. DFL equals S minus V. Actually, S minus V. S minus V in the sense which is equal to the contribution. Right? So then S minus V, selling price minus variable cost. Right? You can have here SQ, number of selling price multiplied by Q, and then variable cost multiplied by Q. Here also selling price multiplied by Q, and then variable cost multiplied by Q. So then you can identify the total, the contribution from that one, deduct fixed cost. Fixed cost FC minus interest. This has been given in a particular separate place of the handout. So therefore, better to write this one. Right. If you can see here the denominator and numerator, so there are some slight changes in denominator and numerator. What these slight changes are the fixed cost and then the interest part. So this is FC and minus interest, INT, right? So if you are looking at this denominator and numerator, you can identify the some of the slight changes are there, but these slight changes are actually the slight changes are interest and then the fixed cost and then the interest. You have to deduct. Then it captures the impact of interest on the company's contribution. Okay. So we'll stop for a degree of operating leverage. We'll discuss that one in next week. Now we're ready for the quiz. It will be starting from 5:15. Can you all switch on your cameras now? I just want to look at you. So the instruction for your midterm, right? Instructions for the midterm. There are 10 questions, right? 10 questions. Again, I'm giving the instructions, right? 10 questions, 30 minutes, starting from 5:15 to 5:45. So, as usual, or as last time we did, you have to do the question, mark the answer as in the MCQ answer, given that there were 4 options, there will be 4 options. So then you have to mark the answer itself in the quiz, as well as you have to do the calculations, right? 30 minutes. You have to balance this work. I don't need clear handwriting. I don't need expert step-by-step answers, but you have to identify the way of doing the calculation first, right? But you have to do the calculation as I lectured you, but not the ChatGPT or whatever the AI platform, right? So then I can quickly understand how did you do the calculation via is that your own one, or is that my lecture material for the that my lecture material, order or the whatever the AI software material order that can be found, that can be captured by myself, right? So therefore, but I don't need clear handwriting. You just write it there. So then do the calculations, take the answer, mark it in the quiz and do the working. One by one for the 10 question. There are one theory question. So then you can write that answer in the paper itself. Once within the 30 minutes, you complete your quiz. So then it will be automatically closed at the 5:45. After you submit your online quiz, so then you have 10 minutes for to upload your workings, right? Upload your working. So then within that 10 minutes, take the photos and then upload the LMS, right? So the thing is, you have to switch on your camera, your team's camera, and then until you finish your quiz, you have to be there. That means until the 6, you have to be there by switch on your cameras, right? 5 වෙනකන් ඉන්න ඕනේ. 5:45 දී පොඩි issues ඒ වෙනකොට ඒක අපි sort out කරගමු. issues කියලා කියන ඔයාලා photos ඔයාලා සමහරලාට කෙනෙක් ඉන්න පුළුවන්නේ quiz මම හිතන්නේ නම් online lectures දැන් අපි online exam වලට අපි ready වෙන හින්දා ඔයාලට මම හිතනවා clap එකයි photo phone එකයි වෙනම ඇති කියලා. ඒ හින්දා ඒ වෙලාවෙදිත් ඔයාලා exam එකේදී වගේම online exam වලදී වගේ ලැප් එකේ කැමරා එක on එකේ තියලා photos ටික අරගෙන LMS එකට upload කරන්න. There are separate links for you to upload them. There is another first link, that is the instruction, and then that is including the quiz as well. Second link, that is the work uploading link, right? So any questions? Any questions for that one? Can you all switch on your cameras for a while? What about others? You also have to upload the switch on your cameras. උදුට ඉනාව නවත්ත ගන්න බෑනේ. Okay, good. ඔයාලා බලන්නකො online platform එකේ ඔයාලා දකින්නවා කියන එක කොච්චර සතුටක්ද කියලා. Okay. So you can go to the LMS. Ramanayakan Lakshita, ne? Ramanayaka Lakshita Jayaratna Rashmi. Lakshita, okay. Ramanayaka and Rashmi Jayaratna is online student, ne? You can refer your exam. Okay, Mahesh. Okay, Rashmi in the sense. Where is Ishar? Okay. So now we'll mark your attendance, right? One by one, I will mark your attendance.
Excuse me, madam.
Yes,
previous lecture එකේදී මේ චලිතට attendance mark කරන්න බැරි වුණාලු. එයාගේ මේ mic එක වැඩ කරන්නේ නෑලු කියන්නේලු.
අපි mark කරමු. Five ten. So then you can start by 5:50. Normally, if this is continuing, if the fuel price is continuing, so this is the way how you need to participate for the exams also. In there, you have to set the camera from not this side. This is now now all of you have switch on the front cameras, no? But you have to actually switch on the side cams. Actually, I want to also check whether you are.
Madam,
Yes.
excuse me. තුලනිට පොඩි issue එකක් තියෙනවා කියලා පොඩ්ඩක් time එක ඉල්ලනවා.
මොකටද time එක ඉල්ලන්නේ? Answers upload කරන්නද? එහෙම නැත්නම් මේ assignment එකටද?
cam එක on වෙන්නේ නෑලු madam.
තුලනි කියන්නේ කවුද? අපිත් එක්ක.
තුලන්
මතක නැහැ. චලිතනේ 30 no exemption 30 no ගුණතිලක.
Yes, madam.
Okay. So mark the attendance. I marked for the first one.
Thank you, madam.
Now you all can mark your second attendance as well. So meanwhile, students, for the report group assignment, what you can do is you can mark your attendance. You can switch off your cameras and mark your attendance. You can do whatever the thing you want here. So for the assignment, group assignment, so since we are conducting the lectures online platform, better to record your presentations. Either using Zooms or Teams, you just have a meeting and then by sharing the slides, you can, by sharing the slide as well as by switch on your cameras, front cameras, you can do the presentation and record it. So then you can upload the record link to the LMS as per the given deadline and then report as a separate attachment. But if you want to do a video, creative video, that's also up to you. I'm not emphasizing you to do a creative video. Just what I need is the presentation, recorded presentation. But if you have already started that process, yes, you can continue that one, no issues, right? And then you can upload the video link to the LMS. By 14. Yes, you all can start your quiz. So then I will stop sharing. Hope you have marked the attendance.
මිස් තුලනිට තාම මේ කැම් එක ඔන් කරගන්න විදියක් නැහැ. මම හිතන්නේ යාගේ මේ කැම් එකට ඇක්සස් එන සෙටින්ග්ස් හදාගන්න බැරුව ඉන්නේ.
මම එයාට quiz එකට attempt කරන්න කියන මට එයාගේ index number එක කිව්වනම් හරි. What is the index number?
0.29.
ඉන්නවා 29 හරි මම මාක් කරන්න අපිට. You can start your quiz. Hope it is visible to you all. Is that visible? You have 5 minutes more. After 5 minutes, you have to upload the working to the LMS. Some of your friends, okay, Jayaratna, Ramanayaka, Rashmini, your camera switch off.
Madam, my name Mahesh.
Jayaratna? Yes.
Yes, yes, yes.
If you have completed, you can start the uploading process. You upload the workings
You
to the
upload the workings, you upload the workings.
you upload the workings to the LMS and then you can leave. Doesn't matter. Complete it, upload your workings to the LMS and then leave. I will end the meeting at 6. I just leave from the main computer, but I'm here. So only 1 minute. Definitely mark your the answers within the given quiz. Huh? Even you're unable to write down the workings, mark the answers in quiz. Your quiz time over. Now you can upload the workings to the LMS. Those who upload the workings to the LMS, they can leave. Can anyone respond? Quiz time is over, no?
I did my quiz at quiz and meeting on phone. I think my camera off that reason.
Sorry, Puta.
මිස් මම quiz එකයි මේ meeting එකේ දෙකේම හිටියේ phone එකෙන් ඒකත් දන්නේ නැහැ කැමරාව off වගේ පෙවුනේ හැබැයි මම on කරගෙන හිටියේ.
Hari kamanne. It's okay. I'll let go time to time. Ada quiz එක ඉවරයි නේද පුතා? quiz එක ඉවරයි නේද පුතා? time එක ඉවරයි නේද? Can anyone respond me? Quiz time is over, no?
Yes ma'am.
ඔව්
මට දැනගන්න මම ඉවරයි නේ. හරි පුතා හරි අප්ලෝඩ් කරන්න workings.
මිස් මන් ජයරත්න මේ මහේෂ් කියන එකෙන් ලොග් වෙලා ඉන්නේ මම.
Then okay.
those who uploaded the workings to the LMS, they can leave.
මිස් අර NPV කැල්කියුලේෂන් එකේ මිස් නෙගටිව් එකක් එන්නේ.
මොකද පුතා?
NPV කැල්කියුලේෂන් එකේදී
ඔය අප්ලෝඩ් කරාද? අපි
ඔව්.
next week එකේ බලමු.
හරි. ඒකේ ආන්සර් එකක් නෑ මිස් හරියට බැලුවා.
හරි මම බලන්නම්. ඒක විතරනේ ඉෂුව එකට ආවේ නේද?
ඔව්.
හරි මම ඒක බලන්න. මම බලලා ඉෂුව එකක් තියෙනවා නම් ඔයාලට මාක් එකක් ඇලොකේට් කරන්න. ඒක ගැන worry වෙන්න.